Let's talk about the big story, which of course is the RBI crackdown on unsecured lending, which came through. Jairam Sridharan is Managing Director at Pirama Capital and Housing Finance. He's joining us now. Jairam, good morning. Great to have you with us here. Thank you very much. We also, by the way, have Mr. Rajneesh Karnatak, who's, of course, head at Bank of India. Mr. Rajneesh, great to have you with us here as well. Thank you very much. Prashant this side. Jairam, if I can come to you, we discussed this, back in August when on that panel you said, and I think a lot of people sat up and took note when you said that there is a credit cycle coming for the unsecured segment. I remember, later that week there was a RBI meeting and the RBI actually discussed that with NBFCs, etc. And it's been on the radar for NBFCs. We've reported that through stories, etc. What the RBI has done last evening, Jairam, would you consider, is it a little bit more than what you expected? Because many are saying that they were expected something on the personal loan side, but of course this NBFC bit, as we're lending to NBFC, that was unexpected. Your thoughts in terms of the severity of the move? Go on.
Thank you, Prashant, for having me. I would say that this is a good positive move. On the personal loan side, it's a good positive move for the industry. It does have some impact on growth in the short term, but that's okay. There's a little bit of bitter medicine, which is kind of time. Now and then, it's kind of necessary for the system to make sure that everything is healthy. See, back in September 2019, risk weights for personal loans, etc., used to be 125%. It was always 125%. It was brought down to 100% a few years ago. Frankly, around festive time, and festival season was weak and kind of growth was sagging, etc. And this was one of the ways in which that was given a fillip. However, we are in a completely opposite situation now. Growth has been on a tear, and as you and I have discussed in the past, there have been, in my mind, some excesses in terms of how much unsecured lending has happened. So it does need a little bit of bitter medicine. And in that sense, we certainly welcome the move of the regulator to actually do this, which is in the good long-term health of the industry, even though it might be somewhat painful in the short term. That's on the unsecured side. The NBFC side, as you said, RBI has been talking about this interconnectedness between the banking sector and the NBFC sector over the last few months. It's a relatively new theme. It's not something we have heard that much about in the past. And one way to reduce interconnectedness is to actually find ways to dampen enthusiasm of one sector lending to the other, which again theoretically makes a lot of sense. I think it is important to manage systemic risk. The question there is going to be, how do we ensure continued access to liquidity and continued access to funds for NBFCs as an important sector of the economy, either by enabling things like deposit licenses, etc., for large NBFCs,
right, or
some other such moves.
Right. Jairam, if you can broadly quantify in the ballpark, for the industry, and if you want to talk about Pirama per se, welcome to, but what could be the impact on net interest margins for NBFCs because of this move?
In the immediate term, Prashant, there will be none. Nothing will happen. The way these moves tend to take place is, see, today the banking sector's capital adequacy is super high, much higher than what regulatory requirements are. What this will do is it will bring down capital adequacy by, let us say, 50 basis points. For all the large banks, capital adequacy will be down 50 basis points. But they are so far above the basic requirements that 50 basis points isn't really going to pinch right away. So the immediate term impact of this type of medicine is not much. What tends to happen is slowly it trickles, and slowly the impact starts to come, and slowly on the margin people start asking for kind of higher pricing, etc., or higher returns on the capital deployed. So immediate term, I don't expect anything to happen, perfectly honestly. But yes, capital adequacy will come down right away by about 50 bips for most of the sector. And over time, people will try to ask for, let's say, 20 basis points higher, from, let's say, AA rated NBFCs, maybe. But that will be a long time, coming. For personal loans, the pricing is already quite steep. I don't really see the pricing changing, but yes, people's enthusiasm for it will go down. boards will start asking questions, saying, "Hey, why are you doing so much? Because if RBI is not keen on this level of growth, etc." So that signaling value is a lot stronger than the actual numeric impact of what's going to happen.
Okay. Interesting point there, Jairam. Well, let's ask the banker how he will look at both of these segments, right? We have Mr. Rajneesh Karnatak with us as well. Sir, good morning. Thanks for joining in. So two-part question. First, what would be Bank of India's exposure to this segment? Unsecured loans, credit cards, along with your exposure to NBFCs. If you could just give us the number. And then what will your outlook be now when it comes to lending on both fronts, the unsecured side, as well as the lending you're doing to NBFCs?
Yeah, to answer your question in two parts, as far as the personal loans plus credit card is concerned, our book is around 7,500 crores as on 30th September. And if you ask for NBFC, then excluding the housing finance, our book is around 29,000 crores. So as far as the impact is there, as per the RBI circular which was issued yesterday, definitely there will be some impact because the RWA will go up. Because of the RWA going up, definitely there will be some shaving of the CRAR. So presently we are at having a CRAR of 15.63 as on 30th September. So it will be coming down as a ballpark number by around I think 30 basis points. That is the ballpark figure, though our risk department is working on the exact details.
So, okay, the second part to the question, sir. Also, if you could just give us the, as a percentage of the book, it really helps if you could just tell us that number on NBFCs. And the second part of the question really is what's going to be the thought process? Like Jairam said, that maybe incrementally, banks might be a little hesitant or maybe they, jack up pricing by 50 basis points when it comes to lending to NBFCs. So give us your outlook as a banker. How will you look at fresh personal loans, if at all? And how will you look at the loans you're giving to NBFCs?
So presently our personal loan book, which is at around 7,500 crore, it is around 1.5% of the total global loan book. So that is not very significant. It's only 1.5%. So definitely the pricing will go up over there because of the increased cost of capital which is there now, which we have to provide because of the increased RWA. And on the NBFC side also, with 29,000 crore of outstanding as on 30th September, for NBFC other than housing finance, our book is around say 5 to 6% of the total global loan book. So that is also not very high. That is also quite moderate. So over there also what we see is that some pricing increase will be there for all A rated and above, in fact all NBFCs. So what RBI circular says, there will be an incremental 25% increase in the risk weight for all NBFCs which are A rated and above, A, AA and AAA. So typically A rated NBFC with a 50 RWA will become 75% RWA. So to that extent the RWA requirement will increase for all the banks, and so will be most likely the increase in interest rate.
All right. Hi, good morning, Mr. Karnatak. I was just looking at your book is approximately 5.2 lakh crores, so roughly around 6-7% approximately, put both these two numbers together, the 7,500 crores and the 27,000 crores that you're talking about. Tell us, but will this slow down the loan growth? What were you earlier estimating, and would you believe that now it will be a little bit slower?
Slowdown of loan growth will not be there. I don't think so, because it will be only a bit of increase in the price. That's all, because lot of appetite is there. Incremental credit demand is also there. NBFCs are growing also very fast. In fact, the growth of NBFCs is much faster than what is happening in the scheduled commercial banks. So growth will not be impacted. Only thing is that some pricing increase will be there in these loans.
Well, that's interesting, Mr. Karnatak. So what you're saying is that you will not read this as a signaling sort of measure from the Reserve Bank of India, because that's the point that Jairam raised, that it's one aspect of how many basis points, loans get pricier. The other aspect is the intent. So you're saying from a Bank of India perspective, you will not go slow on both the categories, personal loans as well as NBFCs?
No, it's not a question of going slow. What I'm saying, the demand will be there. So demand will be there because the NBFCs have a good pipeline. So they are coming to the banks for credit also. So in that manner, the growth will be there as far as the NBFC is concerned, though it will be a tad low. That is what I'm saying.
Jairam, we just had the management of Blue Star with us before you guys came on. And we were asking Mr. Tyagarajan about this. He said, well, 50% of his sales come from this, zero financing schemes, etc. But as we were discussing here in the studio, a lot of it would be also people who can afford to pay up the full thing and buy it on buy it for cash, but who opt for these schemes because it's just easier. Is that an important distinction when we look at the impact for on the consumer side and especially consumer durables, etc., Jairam, or not really? What's the sense?
I think there is something to what you're saying, Prashant. I won't oversteer on that, though.
Okay.
You're right that consumer durables demand does depend a lot on unsecured lending, and slowdown on unsecured lending will impact it first. By the way, the specific part of unsecured lending which is most problematic, which is the small ticket unsecured, less than 50,000 rupees. Again, we have spoken about this in the past. That part is the worst impacted. And that's where the consumer durables play a lot. So RBI is clearly giving more and more signals to the industry saying, be careful about this segment. And I think the industry would do well to heed that advice and actually take a good hard look and make sure that we are doing things the right way. Demand in the short term, is so robust that a little bit of restriction of supply of credit, is not a bad thing. And I think that's why I say that as an industry, we should welcome this, because this is good for the long-term health of our industry, even though in the short term, you're right, it will impact things a little bit, and as it should. If your heart rate goes very high when you're running, you have to slow down your pace for the heart rate to come back to normal. That's exactly the sort of thing that's happening here, and it's absolutely the right thing to do.
No, completely agree. Jairam, so you're saying that the lower end, right, 10, 20, 50,000, up to 50,000, that's a segment which is most impacted. But there is also the space where fintechs operate. Most of the lending book is in that segment, right? Is that going to be problematic? Will that ecosystem hurt quite a bit, disproportionately, because they rely on lending as a large source of income, many of them. Yeah.
See, you just heard Mr. Karnatak talk about how for Bank of India, the personal loans business is like 1.5% of their book, something like that, right? Similarly, in our case, let us say in Pirama's case, it'll be, let's say, 10% of our full book. Within that, even if I look at the small ticket personal loans, less than 50,000 rupee unsecured loans, that is for me kind of, let's say, 80 basis points of my full book, right? It's not a big deal. It's not that big an amount. But if you take an average fintech book, it could be like 70%, 80% of book, right? So what is 80 basis points of our book could be 80% of somebody's book. That's a really big deal then. Because if that part gets impacted, then really you are going to face some challenges. So you're right. The fintech ecosystem is probably going to see it a little bit harder, and depending on the book composition they have, it could be a lot harder than what full service banks or universal lending companies are going to see.
Mr. Karnatak, if I can ask you, when you make a loan to a NBFC, how much will the pricing on that go up by? Could it be all the way up to 50 basis points or not really? If you can give us a quantum?
So that is very difficult to ascribe at this juncture. See, when we are giving NBFCs typically which are A rated and above. So A, AA and AAA rated. So it all depends upon the pricing power we have and the negotiation which we have, and it's also commercial decision based on the market conditions. So all these things play out. So now with this increase in the risk weight which is now prescribed by RBI yesterday, definitely there will be some incremental increase in the rate of interest to the NBFCs, and more so for the AA and the single A rated NBFCs. Definitely.
You want to give us a range for Mr. Karnatak?
So maybe somewhere between 10 basis point to 40 basis points.
10 to 40 basis points, depending on how high NBFCs are rated.
The risk rating. Yeah, rating, whether it's a AAA, AA or A rated NBFC.
Got it. Jairam, you want to respond to that?
My view on this, Prashant, is that what you're going to see is that even further flight to quality. You have today AAA rated NBFCs starting tomorrow are going to be, instead of at 20%, they're going to be at 45% risk weight. AA rated NBFCs are going to be at 55% risk weight. This is a much better situation than being in an A or an A minus or a BBB NBFC, where you're going to be near 100% risk weights now, or closer and closer to 100% risk weights. So the risk weight delta is going to bias you a lot more towards AA and A rated NBFCs, of which there are just a handful. There aren't that many. There are just 15, 20 NBFCs in the entire universe of AA and AAA, which essentially means the flight to quality towards AA and AAA is going to mean that all banks are going to want to lend to just those small group of people. And so my view is that AA and AAA rated NBFCs are going to have the bargaining power and the negotiation power to not take much increase in pricing, but below AA, where the number of NBFCs increases a lot, there it's going to be a lot harder.
Jairam, just one last question. Would you across the NBFC space, right? Because this segment, it's small for you. Also, it's small, right? But the point is, the growth rates were just through the roof. I mean, it was a very fast-growing segment, right? So should we moderate our growth expectations as we head into 2024? A loan growth across NBFCs broadly. I mean, of course, it'll vary, but is that the way to go? Go on.
I think overall unsecured lending growing at 30+% annually, etc. I think we should moderate that out. I don't think we are going to see that level of growth in the industry, and we have had that level of growth for 2-3 years now. So it's fine for the growth rate to moderate a little bit from there. So as I said, it's a good thing for the industry. What the regulator is trying to push us towards, and we should embrace it, and we should be okay with running a little bit slower.
Okay. All right. We'll leave it there. Jairam, great to have you with us here. Thank you very much for joining us. We sort of highlighted this back in August, and now, of course, there's action, as you highlighted, from the RBI, really putting the brakes, and it's a good thing, as you put it. Mr. Karnatak, it's a pleasure having you with us here, sir, and providing us your perspective, as a seasoned banker in terms of what this would mean for banks and NBFCs as well. Thank you very much, both of you, for joining us here on CNBC TV 18.